Good morning. Good morning, everyone. Hello. Hope you're all well. A little bit later this morning, but as they say, better late than never. Hopefully you're all well wherever you are. Good to see a bunch of you guys jumping on. Alison and Jeff, Hardick, Graham. Welcome to another Wealth Coffee Chat, folks, wherever you are. If you knew, Jason Witten's my name down there. Been property investing over 20 years, 22 years actually. Coaching property investors, maybe just like you, over 18, across Australia and New Zealand. Along the way, paid attention, learned a few things, and each morning we get together. We have a Wealth Coffee Chat, nice little coffee, homemade, and talk about the world of real estate investing. So if you're new, let us know. Give us a shout out in the chat. Say hello. Hello. Thought I'd talk today about the supply of real estate. And we've chatted sort of on and off about this for a little while. And the supply of residential real estate in Australia, even industrial real estate. We talked about that the other week. A little bit tighter when it comes to its supply chain as well. It's gone up quite significantly in value. Some industrial logistics real estate in Australia. That's been a crazy boom in that world. Hey, good morning, Michelle. And the residential real estate world has had a bit of a run of it too. It's had a good time of value increases, well overdue significantly, probably, maybe 5 to 8 years in some parts. And other parts, hadn't seen something for, maybe since 2012, 13. So, we always have a bit of a conversation about how long-term property investing is. You guys know there's a couple of sayings around here: buy well, never sell. That is the concept, the idea. And this thing's a marathon, not a sprint. It's going to take some time, folks. If you're new and you're here for a get-rich-quick scheme, move on. Go try something else, because property is not that. Property is a great place, a foundational place to store your wealth with quite a lot of benefits, long, medium to long term, and even short term if you get it right, some tax deduction, some cash flow. But long-term storage will outperform inflation, often a lot more, and give you some extra value in return. But we're not talking about that today. Today we're going to talk about the supply chain in Australia, and just wanted to maybe touch base, see if this is working right now. Yes. Having a look at what's going on in the market. And I'm pretty sure we've touched base on these supply charts before, but I wanted to sort of circle around today and have another little yarn about it, because, there's some rhetoric about, what's the future hold for us. And next year, 2022, what's going to hold for us as property investors. And supply certainly dominates some of those conversations at the moment. The other day we chatted about this, which is the housing market brought on artificially into the first home buyer, upgrader, new construction world. And that was a significant increase in new construction homes, which has put some significant problems into the supply chain. Many of you guys might know this already. Prices, the cost of building a property has gone up. The underlying conversation, though, which is the one I want to talk about today, because this is difficult to resupply. The housing market is going to be significantly tight supply for quite a long time, and also the apartment and townhouse market is going to struggle as well for a few reasons, but we're going to talk about that today. But, the underlying one, if you look here, from probably a peak of sort of 215, 216, multi-density dwellings in Australia have significantly declined to probably about 1/3. If you look at this, if you sort of divide that into 1/3, so fallen, call it 66% in supply metrics since 2015 and 16. And, this is an interesting conversation because the house market has had an amazing run when it comes to our values and prices. And the apartment market, while in certain circumstances has done well, hasn't really felt the effects of that space at this point in time. If we have a look at the supply chain when it comes to the world of rental increases as well, right? If you have a look at this, double digits literally in every state of Australia, even Adelaide's up sort of 9%, double digits in house rental bounces. Okay, look at Brisbane, 14%, and Hobart. Brisbane and Hobart in house rentals up significantly. If you haven't redone your rents recently, folks, make sure you get onto that. But the one that I've been chatting about recently, the one to watch is this one. This one here, Melbourne. Melbourne has been given a real touch-up. Many of you guys know we've chatted about this. COVID, whatever, right? And the lockdowns. So it's been compressed. Rents have been compressed. Rents in units have made a small retraction in some places. The supply chain in Melbourne is pretty nasty. Let's have a look at the supply chain next year in Melbourne. This is a city of, is it 6 million people? Can someone check? I've just had a mental blank, actually. This morning I should have checked before I jumped on. Is it 6 million or 5 million? Anyway, I'm pretty sure it's 6 million, but let's, Victoria, let's say. But, you have a look at this supply chain, folks. We had, again, another kind of peak in kind of, we had that peak, that general peak across the country, sort of 215, 216, 5 million. There you go. Thanks, Alison. 5 million people. And again, we've had significant multi-density reductions. And if you look at what's coming, what's locked in, in Melbourne, it's pretty sad when it comes to, the past decade. It was lower come 2011, 2012. And if you have a look at sort of capital growth stats back in those days when it's sort of prior to here, you can have a little look at what some of the future might hold for us as property investors. But look at this. We're on track for, and these coloured ones are, possible, more likely, maybe deferred, etc. They're not done and dusted yet. If you understand that, this is already under construction, the dark grey. So we don't have a lot of supply, folks, coming into that market. Let's have a look at Brisbane, and Brisbane's a disaster. Check out that from a supply point of view. When we look at, multi-density supply in the pipeline for 2022, oh my lordy, it's like 2,000 and, over a city over 2 million people. So, it's an interesting conversation when we have a look at this supply conversation. And I want you guys to stick with it today because it's a little bit sort of all over the place, but it's going to come to where we need it to come to. Property prices have risen significantly, mostly led by house prices. Good quality apartments. We have a residential real estate agency in Brisbane. Good quality apartments overlooking the river, city views, well located, have risen significantly as well in resale terms of recent times. So, we're looking at what does next year and the year after look like? Where's there room? Where's the room in the market, folks? Where's the room in the market for property prices to expand? And where's the room in the market for rents to expand? Okay, from a base that we might want to be invested in and have a bit of a look at. Because one little thing right now, many of you guys have seen us do this before, the concept of proximity for profit, right? The proximity for profit. The proximity to something, Now, it's not always the CBD. It can be other business centres. In Sydney, you've got, employment nodes. You've literally got from Newcastle to, Sutherland to Parramatta to the CBD. There's different proximity locations, but the distance from a location that you want for the budget, two things have happened. The budget's increased. We used to talk about 500K. Now we're talking really in the world of, good positional buying, 650 to 750 right now. That's what we're doing. So the average dollar's gone up. And if you want to try and buy between sort of 5 and 10K from the let's say the CBD at the moment, then, obviously you're buying an apartment. Townhouses are sort of 20 to 30K away. And then the house market, is kind of like 35 to 45K away, depending on where you are, okay? Depending on the price point. Now, this is your budget, right? So you set your budget, you've got a borrowing power, and then your sort of distance from the city. So for me, the question is this. We're starting to have this question, right? This is the point of today's conversation. If you've got 650 to 750 buying, do you trek 50, 80K from the CBD or infrastructure, okay? Do you trek that far to buy a house, which arguably the house pricing in most locations has, gone up significantly? It's the one that's gone up the most. Question, or do you change the type of property and consider a townhouse or the right apartment for the same money, the same budget, 750, and the distance and the location that you can purchase, might be 6K to the CBD. It'll rent for the same. Matter of fact, it'll probably rent a bit more. The net result will probably be around the same amount, but your location will be better. And where is that playing out? Where is that sort of like, wow, this is the difference is pretty significant. That's my question right now. It doesn't mean you should give up on a house. There's great purchasing in the right cities for housing as well. Where's the value? What are we looking at? Where's the space for growth as you go? It is a balancing act, Nigel, as you go. Now, my preference, Nigel, is if you can do a two-bedroom, two-bathroom, closer to the right infrastructure. We've seen that play out a lot better over time, and certainly Michelle is correct. The quality over the quantity, as we're looking at what we're doing. So it's budget driven. You guys know this. It's budget driven. You've got a certain buying power, and it's driving your ability to purchase. And the other conversation is this. So if you want to get closer to the city, I believe places like Brisbane and Melbourne, it won't be long, maybe a decade, maybe less, maybe 5 years. You won't be able to purchase under $1 million and under, 10K from the CBD of those places in a good building or a good location, right? It's going that way. You just have a look at Sydney. Have a look at our biggest city, and you go and try and buy, anything under $1 million as we go. Melbourne's as big. Melbourne's as big as Sydney. The house market, within the 10K radius of Melbourne's bolted, right? No, you're not going to go and buy a $4 million house to get a 1.5% rental yield. That doesn't make sense. But you will, and you should, and many of us are, if you haven't already, purchasing, a good quality apartment, 8K from the CBD of Melbourne, 2-bedroom, 85 square metre, 2-car garage, 2-bathroom, 2-bedroom, because that thing's, significantly undersupplied and well positioned. Okay, so it's about positional buying, folks. It's about positional buying. We talk about this proximity for profit, which gives you positional buying. And at some point, you won't be able to buy that position for that money. Okay, we've talked about this for a long time, and this is now playing out in places like Brisbane. It's playing out within the 20K radius of Brisbane. You cannot buy a house under 650 brand new now. Now, there's some secondhand ones there floating around, but arguably some of those locations have not the right tenancy nor the right infrastructure for the future. But, you know, that's where we sit. But if you have a look at this right now, have a conversation in here to purchase, to service a mortgage on an average apartment at the moment is, it's a terrible line, but it's around about, it's almost the lowest it's been for, you know, for a long, long time. There's a little dip here. It's probably around there. And then you have a look at a house. Even though the house prices have still gone up, it's not as expensive as a percentage of the mortgage as it was to service the average house price in 2008 and 2009 because the interest rates were so high. So, but we have this gap, team, of value, and you know, the distance between renting a house now and renting a apartment is pretty significant as well. So for me, when we stack all these things together, there's some information there for us to go, all right, well, you know, what are we thinking about when we're purchasing? Our next purchase might be, you know, what is the rare piece of real estate right now in the supply chain, in the marketplace, within my budget that I can have a look at. And you're dead right, Michelle. It's never black and white, this stuff, right? And it might be, you know, let's say Brisbane is a great market. Let's say Brisbane's the market. But if you've got 3 properties in Brisbane already, then you're over investing in one location, right? So even though Brisbane's great at the moment, maybe someday it won't be, and you want to be diversified. Maybe Newcastle, maybe Canberra, maybe Melbourne, maybe those other marketplaces are smart for you to diversify, because diversification in location, certainly for land tax and other expenses into the future, need to be considered. All right, so as we go along. We did the math the other day. If you have an apartment go up $1 million and then you have a house go up $1 million, your land tax bill on a house is significantly more than the capital gains and income gain on an apartment. So some of those things are important to understand. Wollongong, Bob. Yeah, Wollongong, Newcastle. Some of those feeder cities. There's other feeder cities like Gold Coast and Sunshine Coast. They've bolted a little bit too. You know, places like Toowoomba and Ipswich in Brisbane. You know, places like Bendigo and Geelong your rates doubled this year, Michelle. See, and that's the thing. It's not black and white, Michelle. I think you nailed it right there. None of this is black and white. If someone says, "Oh, houses are better," like, they don't know what they're talking about. They're inexperienced and they don't know how to have a conversation across the whole gamut, because there are things to consider as we go. So there you go. Yeah. Anyway, hopefully that makes sense. Like, really, at the end of the day, the culmination of the conversation today is this, folks, that we've got a severe supply issue. It's extreme in all asset classes right now. Which one has the bigger gap, opportunity, and distance in rent and pricing? That's the apartment space right now. And can we find the right apartment space, let's say in Melbourne or Brisbane, to capitalize on that? Now, that doesn't mean you don't buy a house if you're in for a house. What I'm saying is, if you're budget constricted, my preference is to stay closer to infrastructure rather than trek a million miles away. That's my preference. But again, doesn't mean that is the only way to do things. Just something to consider with a chat and a conversation this morning. So there you go, team. One thing I love is this. Have a look at the rental pressure. the rental pressure on the rent market, and that's not going to stop or slow down. So I've said this a few times. If you haven't put your rents up of recent times, make sure you go and do. Have a little look at it and keep an eye on your property portfolio. All right, that's it. Wealth Coffee Chat done and dusted. Yeah, I mean, Alison's got a good point there. The distance of people, not having to travel, mindset. There's a few things to consider. And I think the future, a lot of younger people like the idea of amenities and lifestyle over pieces of dirt with lawnmowers and being miles away from the city. That's pretty normal. That the whole world's transformed over years with that. It's not only Australia. That's happened in every major city in the world. So have a think about that. Have a look at what that means and get your position purchased for you as a property investor. All right, gang, that's it. I'm done. I'm dusted. Wealth Coffee Chat for Tuesday the 14th of December. Over and out. Tomorrow, ladies and gents, folks, tomorrow is going to be my last one for the year. Last one, so don't miss it. Do not miss it. There you go. Don't miss it. Tomorrow, the last one. You guys make sure you pop along. All right, well, anyway, just rabbiting on now. Have a good one, folks. That's it. Done and dusted. Join me tomorrow, round about the same time. I might even wear a Santa hat. No, I won't. I might see if I can get some special effects on my live stream. All right, there you go. See you, folks. Have a good one. Yeah, Alison, maybe. You never know. All right, see ya. Bye. Have a